Good morning, everyone. Thank you for joining us. Thank you for joining this edition of TC Live. My name is Koromane Koroye. I am TechCabal's managing editor, and I'm really excited about this morning's conversation with Mr. Adam Molai. And I can't wait for you guys to learn from him and hear, his insights and his industry knowledge. He has years of experience across multiple industries. So we're really excited to bring him here. Good morning, Adam. Good afternoon. Thank you for joining us.
Good morning, Koromane, and thank you very much for having me on your show.
Oh, no problem at all. Okay, so
and I think it's me who's actually going to learn more than the other people who are the participants. So I think it's a mutual learning process.
I'm actually excited to hear that. Great. So let me tell you guys a little bit about our guests this morning so you can really get an idea of who we have with us today. Adam Molai is an African industrialist and founder of TRT Investments, a Mauritian diversified investments group with interests predominantly in manufacturing, bottling, property development, and financial services across the continent. He graduated with a business degree from the University of Buckingham in the UK, and then he went to Lakehead University in Canada, where he obtained a first-class degree in commerce. In 2002, he started Pacific Cigarette Company, which has grown over the past years to become one of only two significant African-owned cigarette manufacturers in the world. Pacific Cigarette, which is formerly known as Savannah Tobacco Company, now has a considerable share of the Zimbabwe market and a growing presence in regional markets as well. In November 2020, Adam founded the Jua Fund, a $2 million venture capital fund to provide African entrepreneurs with much needed access to capital, mentoring, advice, and networks. Through his philanthropic non-profit organization, the Adam Molai Foundation, Adam has been very instrumental in uplifting the communities in Zimbabwe with self-sustainable projects. The foundation is also active in disaster interventions. Just from this bio, you can tell that Mr. Molai is very much invested in the continent, very much invested in helping emerging entrepreneurs scale to the next level with their businesses, which is why we had to get him on TC Live, because the Jua Fund is so unique in the fact that it is founded by an African who is investing in African entrepreneurs, which of course is pretty much rare in our ecosystem. So thank you so much for joining us, Mr. Molai. Before we get into the conversation, we'd like to just go through a brief presentation so everyone in the audience understands the reason why we're having this conversation and why it's important. I'd also like to say that when we get to the Q&A session, Mr. Molai has said that he's totally fine with people actually coming up to speak and ask their questions. So if you have questions, you can send them in through the Q&A box and we'll select, one or two people to come up and ask it directly. Okay, so let's get into the presentation. So as you know, the ecosystem is really open now, and there are just a lot more founders coming out of the continent who are building great products and services to really take the continent to the next level. So here we're seeing a picture of what early stage deals in Africa look like. We're looking, between the period of 2014 to 2020 and seeing just the differences. So seed funding makes up a large proportion of VC deal volume in Africa. Between 2014 and 2020, seed stage deals made up a third of total VC deals. However, it's a different story when you look at the deal size or the value of the deal. So while seed stage deals are the second largest by count, they have the lowest value. And as you can see, in this presentation, that's just a mere 6% of the total funding value received. So it's therefore safe to say that investors in Africa are writing many small checks. But there has been a lot of growth over the years. And the fact is that early stage funding in Africa is still growing. In 2015, total funding received in early stage deals was only 5.7 million. In 2020, however, early stage startups raised 22.7 million. This doesn't include unspecified rounds and alternative funding rounds like non-equity assistance or initial coin offerings. So there is growth, which is exciting. So now let's look at ticket sizes, right? So when we look at some early stage investors in Africa, we see a diversity of check sizes with, of course, different investment terms. So funding for early stage startups on the continent can range from $50,000 to well over $250,000. However, there are problems with early stage investing in Africa, right? There are a few snags and we have to talk about them. And some of these problems can range from lack of context, which is a very common problem when you're dealing with foreign investors, who don't have real insights into the market that they want to invest into. There's also poor fund management on the part of startups, which obviously discourage many investors. So we're going to talk about these problems and possible solutions during today's conversation with Mr. Molai. So we definitely encourage, if you'd love these numbers and you'd love to see more stats, we encourage you to sign up to, for our early stage funding report. We're going to be releasing it soon. So sign up using the link on the screen and you will definitely get an email when it's ready. If you would just like to contact us, talk to TC Insights and just learn more about what we're doing and how we're really leading Africa's conversations using data and insights, we have an email, tcinsights@bitcabal.com, or you can find us on TechCabal's website, /TC Insights. Guess we can get started. Okay, so we're gonna launch right into the conversation. We have some questions, some general questions for Adam, and he's just gonna walk us through his history. So let's get started. So Adam, when it comes to, going through pitches, I assume that being in the industry that you're in and what you're doing, you probably see a lot. What key elements do you look for in a pitch, and what advice would you give startups when it comes to, what to avoid, what to think about, what to put aside, what to include?
Kromane, I think what I've seen is most important is we also look at the passion of the entrepreneur. We need to feel the passion of the entrepreneur, because entrepreneurship is a tough journey and it really requires you to bring everything out of you. It tests you in ways you would never imagine. It pulls you in ways you would never imagine. So one of the most critical things we look at is the passion, because unless you're truly passionate about the project, the likelihood of you staying the course is diminished. So firstly, the passion of the entrepreneur. Secondly, their knowledge of their business. From a macro perspective of understanding the industry that they're entering into in terms of what does the landscape look like? Who are the current players? How does my product come in and create a blue ocean within the industry that we're in? If it's going into an existing quite cluttered industry, what are the unique selling points that they bring in terms of their product or service that will differentiate them from everything else in the market? Because ultimately, if you're not differentiated, you're not competitive. So really being competitive comes from your differentiation of your product and service. And another is also how deeply have they thought through their implementation? Because every idea is a great idea, but it's how you implement it. Have they really gotten beyond the what and gotten into the how they're going to make sure they see this project through? So what are they going to do? Who's going to be involved? who's going to do what, right? What skills do they need to be able to execute what they need to execute? Where and how are they going to get those skills on board? So literally, it goes all from the passion, the knowledge of the industry, the knowledge of their own business, and the plan of implementation in terms of execution of the business. So those are some of the key facets that we look at as people are presenting.
Thank you so much, Adam. I really love how you broke each point down, showing just the journey from passion to execution. Really great points there. Next, I want to talk about policymakers. Something that a lot of African entrepreneurs, founders are very familiar with is how sometimes tough the landscape can be. How do you think policymakers can contribute to improving the local landscape for early stage funding?
You know, our landscape on the continent has not yet evolved to embrace us as Africans and our ideas. Our landscape, in my view, has been really created to facilitate FDI, so foreign direct investments. And so it's been designed to facilitate foreigners coming to invest within our environments. And not enough has been done to actually develop a landscape and a framework that's aligned to local investors. So my advice is really to start what the needs of local investors is vis-a-vis the needs of foreign investors, right? Making sure that the regulators lower the bar for local investors. I look at it from a perspective of taxation, from a perspective of incentives, right? When you look at the incentive system, it's aligned to make sure that it facilitates foreign investment. So literally, as a local investor, what happens is your cost of setup becomes higher than the cost of setup for a similar foreign investor business. So those are some of the first things that we need to look at. Secondly, I think it's a mindset. We need to start developing a mindset of more confidence in our own. I think one of the major challenges that local entrepreneurs face is that when you go and visit a regulator, they look at you and they say, but I know this young lad. He grew up in my village. He grew up in my township. So already they've minimized what you're presenting, and already they're not taking you seriously in terms of the journey ahead. So I think we need to take away some of these prejudices that we internally hold towards ourselves and stop seeing an investor as somebody who is from a different continent, who is from a different racial background, and who's from a different environment. So we need to start changing in terms of the psyche of our own people who are in regulation, the belief and the understanding of who and what an investor is. So I think it starts from the psyche before we start even going into the detail of which regulatory frameworks would need them to continue looking at. It starts with the mindset. Let's get the mindset right to embrace our own as investors. Let's then now level the playing field between foreign investors and local investors. And then let's start now developing a framework that's actually even more favorable for locals so that we develop ourselves and we develop our continent from an internal perspective.
That's really great. Coming from the perspective of, changing the psyche first before, starting these conversations. Tell us about some common assumptions or misconceptions around early stage investing, especially in Africa, and how those misconceptions limit the opportunities that are available to startups.
I think often we don't look too far as entrepreneurs. often we look for conventional. So we normally want to start looking and saying, can I approach a bank? What type of financial institution can I approach? And we go conventional. I think there's not enough work that's being done by entrepreneurs to look for these alternative sources of funding. VC is developing. I mean, if you look in 2020 alone, there was a 44% increase in the number of tech rounds on the continent to a number of 359. Yes, there was a reduction of 29% in the total funding, which went to 1.43 billion. But that's 1.43 billion, which very few of our local entrepreneurs are aware of. And even when certain venture capital funds become available, I look at Jua. Within a month, we had over 700 applicants that came from across the continent. And I look at it and I say, 700, yes, sounds like a significant number, but I think given the need on the continent and the number of people looking for funding, to me, it doesn't look like people are out there actually hunting for alternative sources of funding. So I think we need to move away from convention and actually encourage entrepreneurs to continue looking on the landscape and say, who is coming in with new sources of capital, and how do we access those new sources of capital?
That's really great. Move away from convention. That's definitely a key takeaway. How can African countries that are barely visible on the funding radar improve their prospects and attract more funding? You've mentioned, obviously, looking away from conventional funding sources, but is there anything else that they can do perhaps to be more visible?
You know, it starts with initiatives such as the Jua Fund, right? Remember, foreigners will take their cue from locals. So if foreigners are seeing us as local investors showing confidence in our own people on our continent, they will then come alongside us. One of the barriers that you raised in your presentation was the fact that people don't understand our landscape, right? People don't understand Africa as an investment landscape. So if they see me as Adam, an African, investing in fellow Africans, they are more willing to come alongside me, knowing that I have a better understanding and knowledge of the African landscape. So the more Africans we can get investing in the continent, investing in entrepreneurs on the continent, the more foreigners we're going to start attracting and grow that 1.43 billion to 3 billion to 100 billion to trillions of dollars over time, because more of our locals are getting involved in supporting local.
That's really great. Definitely think that it's true that we have to be the ones, or local investors have to be the ones to set the tone, you know, and then in that way, foreign investors now know what's possible. From your experience, what pain points have you, what have you experienced in funding early stage startups, right? And based on the pain points that you've experienced or seen, what are the best practices that startups should adopt?
I think as startups, let me start from the end, right? I'm looking when we had funding ready, right? When we finalized on applicants. And then I'm looking at the journey from then to some of those applicants actually then being able to access the funds that have been allocated to them, right? So I'm looking and saying, when we start the application process, we should be looking at saying, what are the due diligence requirements? What are the no KYC requirements? What are those requirements that I'm going to need to fulfill upon successfully attaining the funds? What I've seen is there's almost a lack of belief that I'll get the funds. So it's almost, let me go in, let me try. When I try, if I get the funds, then I'll look for what's required to make sure that I comply. Now, I think we should be looking at it in totality, where we're looking and saying, I'm going to get the funds. So because I'm going to get the funds, what do I need to put in place to make sure that I, one, get through the process, two, once I'm successful, am able to efficiently provide all the due diligence requirements to be able to access the funds. Because what you have is some taking months before they're able to access the funds. They need them. The funds are there for them, but they can't touch them because they haven't fulfilled all the due diligence requirements. Secondly, I think it's also important that when pitches are being done, presentations and submissions are being made, there's veracity, there's truthfulness in the submissions, because it's critical to ensure that your submission is truthful. Because what you don't want is go through a tough competitive process, get through on the basis of misrepresentations, and then you sully your ability to be able to raise funding thereafter because you'll be flagged as not being credible thereafter. So I think it's important that as we put through what we say we have, what we believe we will have in the future, we also state, but we don't state what we believe we'll have in the future as what's already there. So it's important to be able to differentiate between what is there physically today and what do we expect to have in 3 months' time, and not show all of that as what is available today.
Really great points, really great points. What are some of the common mistakes that investors make when it comes to selecting which startups to fund? I think it's interesting that you said what the founders present have to have veracity, right? Which means that investors should be looking for that. They should be questioning, how true is this? How realistic is this right now? So apart from, obviously doing due diligence, what are the common mistakes have you seen just in your industry when it comes to investing in startups?
I think from the investor perspective, all that glitters is not gold, is where I would start that statement, right? Is, there's often a presentation bias. Some people are fantastic at presenting. Others are not great presenters, but have a solid business. So over time, you're then able to differentiate the substance from the hot air, right? Because often, because you're looking for passion, it's very easy to confuse passion for great presentation skills. And we've got to be able to separate the two, that somebody can be very passionate, but not a great presenter. Or somebody can be a great presenter, but actually not be passionate about the business. So I think we need to develop the lens to be able to differentiate between presentation and substance. And that's one area that I've seen coming from an investor perspective, where you only note the lack of substance when you now start going into deeper interrogation of the project, which you could have, stepped aside from had you not had that presentation bias. So there is a potential for presentation bias that we always need to be cognizant of as investors.
Yeah. Thank you so much. These are really great tips. And, I'm really hoping that the, participants are paying attention and taking notes. So there's some questions that came in from some of our audience members during registration. I would like to go through a few of them with you before we move into the Q&A section. So apart from funding, because we know that funding is a big challenge, For early stage entrepreneurs, what are the challenges you think they face? Like, for example, someone asked, what about access to affordable professional services? Isn't that as important as receiving funding as well, especially for early stage entrepreneurs this is their first time leading a company or leading a team? So what else do they need to succeed in that early stage?
What you're raising is something that we've been having extensive discussions upon, to say, how do we create incubators? How do we create a process of providing education to these early stage startups so that they are more prepared for the journey ahead, right? And part of it, we're actually looking at how we're going to create some series in terms of our Jua platform, even on YouTube, where we're starting to talk about these issues, saying, how do you generate an idea? How do you convert that idea into something that is marketable, something that is feasible, something that now can be taken to the next stage for investment, right? So we need to start walking the entrepreneurs from the stage of coming up with the idea. How do you then develop it? How do you look at your idea from multi-lens basis? I look at some of the entrepreneurs we got coming through. They came through with an idea that, for lack of a better example, we're going to be selling computers that are solar powered. And we looked at it and thought, this is a great idea. Solar powered computers for the African market. But what we saw that was bigger than the solar powered computers was that each of these panels that were going to be powering these computers can actually serve as a base station for a very rudimentary network. So a very rudimentary cell network that has long distances because of the transmission distances of the solar panels. So it's a process of trying to educate entrepreneurs on how to look at your idea from multi-lenses. Look and say, what are the alternative uses that I can use? I'll give you a very typical example that came out of Nigeria. A company was producing sour milk, and they had no idea how to get to market that sour milk so that they could increase their volumes. They did further research, and upon doing further research, they realized that it helps get away any of the strong, pungent smells that come from some of the food we eat as Africans. So if we eat something that has a very strong smell, and then we drink some of that sour milk, it's able to dissolve away those smells, and therefore, they found an alternative use for it. Just by marketing that alternative use, they went from not being able to sell to having to expand their production capacity. So that's what we need to always be doing as entrepreneurs, saying, how do I look for alternative uses so that now, as I'm presenting my case, as I'm presenting my project, I'm presenting it with multiple alternative uses that actually get greater value for what I'm trying to do.
Oh, great. And, I really love that example, of being able to even market your product and in a way that will increase sales and revenue and all of that. So really, you have to see things from a different perspective. We have a question here from someone who wants to know how upcoming businesses can thrive in an environment where the only lenders are short-term microfinance companies. Is that even possible? Can they thrive, or will they need to find, like you said, unconventional funding sources?
I'm always reticent when it comes to short-term funding, because one of the most basic tenets of finance is what we call the matching principle. Matching the tenor of your requirement to the tenor of the financing that you seek. To seek short-term funding for a long-term project, it's like to seek short-term funding to buy a house. A house needs long-term funding. It needs a mortgage that will give you 15 to 25 years to pay. Now, if you get a 1-year loan, how do you meet those repayments? It means you are damned before you start. So I always generally advise strongly against a financing mismatch. I know it sounds like it's a bridge. And I know you always feel as an entrepreneur that, look, in 3 months, I'm confident I would have done X, and so I'll be able to bridge that. But I believe you need to have already negotiated what you believe you'll achieve in 3 months, so that you have it almost as a letter of intent. And the intent has been almost acquired, that once you meet this short-term condition precedent, the 3-month window will open. So once you meet the ability to, let's say, build the foundation, using that same house example, then the longer-term funding will open. Only in an instance like that would I use short-term funding, because I've been guaranteed that once I've completed my foundation, I can now access the correct funding. So the only time I would use short-term funding is if my next level of funding has been fully assured, not promised, not probable, but assured.
Thank you. Thank you. So someone here has asked, how does a company balance timing between proof of concept and fundraising? Is there a right time to transition from one into the other?
Transitioning from which, please just come again?
Balancing between POC, proof of concept, and fundraising. Yep. Yeah. Is there a right time? Is there ever a right time?
I think the right time is when you've stress tested your concept, right? Such that when it's being stress tested by those to whom you're approaching, for funding, you won't present yourself as if you're presenting a half-baked cake, right? There's nothing that investors frown down upon than somebody who's walked a 2-step journey of what they know should be a 10-step journey. So, you know, there's certain minimums that need to be there. There's certain minimums in terms of even testing just the concept, feasibility of it, marketability of it, and all the various key tenets of trying to put together a concept that should be able to then get the support of early stage investors. Because if you haven't done the minimums and you've just thought of the idea, had a day or so of interrogating it, and then you're already thinking, okay, let me present it to some early stage investors, that's not enough. You really have to make sure that you've stress tested it from multi angles, so that it's very clear that you have a robust plan in which now people can start investing even into feasibility, because it's robust enough for that kind of investment to happen.
Thank you. Very stress testing, very important, very, very important. So another question we have here is, what is needed to change the funding landscape to accommodate bleeding edge technologies like quantum, biotech, and cleantech? I think that's a really interesting, very interesting question.
It is very interesting. You know, what's required for any, I mean, right now, we invested $1 million through the Jua Fund into a big data supply chain entity. What did I know about big data? What did I know about big data and supply chains? What did our peers know about that? Very little. But because of the manner in which the project was fully researched, fully thought through, fully stress tested, and very clear in terms of next steps to be able to see it through, right? We took that leap of faith, right? Because the work had been done. So as an investor, we don't need to fully understand. I remember when we were speaking with that successful entrepreneur, I remember saying to him, I don't understand your business, but I love it, right? And the concept and the solution being provided was so clear. It was very clear. It was meeting as a pain point that is very prevalent in the market. It was very clear that there is a line of sight between the idea and the solution to meeting that pain point. So in spite of not understanding the big data part, and in spite of not understanding the biotech part, but having a very clear description and line of sight to solving the problem and providing the solution provides enough for an investor to be able to understand and take a view and a position on it.
Great points. Thank you. Thank you, Adam. Now there's another interesting question about impact investing in Africa. So someone is asking, are investors keen and willing to embrace and bet on impact entrepreneurs, which I believe that's kind of why the Jua Fund was set up, right? To really bet on impact entrepreneurs.
Yesterday, I was actually speaking to one of our impact entrepreneurs who we have funded, I think so far, $250,000. Now, great idea, right? They have gone on a zero emission solution. And by creating that zero emission solution, they're then selling carbon credits, right? So this is impact as impact goes, because we're dealing with a problem of pollution, and we're also dealing with a problem of deforestation. So part of what was causing the pollution is people having to chop down trees, which chopping down of trees they then use as wood for their stoves so that they're able to make a meal. It's a requirement, it's a basic requirement. Everybody needs to cook every day. What did they do? They've started making pellets, right? Pellets from agricultural waste, which pellets do have reduced emission. And then they've created a process where these pellets in a stove also make sure that there's zero emission again coming out of the stove, right? So it's zero emission input, zero emission output. And then they've even put an IoT so that if you are a carbon credit buyer, you're able to see that there's 126,732 stoves that are on right now. They are on in Abuja, they are on in Kano, they are on in Johannesburg, they are on in Harare, right? So that is impact investment. And so what we are looking at in terms of the businesses are actually businesses that offer maximum impact for the continent. Now we look at it and we said, you take that from the cooking concept, you then scale it out into industries that are using a lot of wood. So in Malawi, in Zimbabwe, in Tanzania, tobacco farming uses a lot of wood. So they chop down a lot of trees. They've been doing a lot of reforestation, but that's not enough. if we now help with this solution, which uses agricultural waste, creates the same kind of pellets, that goes in as the feed instead of chopping down trees, it's already zero emission. And then they also introduced the zero emission process in those curing facilities, right? You now have an industry that is creating huge pollution, going down almost to a zero pollution. You have an industry that is chopping down millions of trees every year, chopping down no trees. Now, if ever there was impact, that's impact, right? There's impact in terms of crowdfunding of Africans across the continent to be able to fund agriculture on the continent so that our people in the villages are able to produce food and all sorts of other things for people in the cities. So when we look at the projects that we have funded, they're major impact projects. So we're big believers on the whole aspect of impact investing.
Yeah, I think Africa is definitely in need of more impact entrepreneurs, and they also need impact size checks as well to support them. So we have a question from David Uchichiko. I'd actually like to bring him up to ask it. David, if you're able, can you just signify by raising your hand, and you can, unmute your mic. Yeah, there we go. You can unmute your mic. You can turn on your video if you can, and let's hear you. You can ask the question you put in the Q&A.
All right. Can you hear me?
Yes, we can hear you.
Okay, so I wanted to ask, what's the due diligence? Like, most startups have this issue where we don't have like a roadmap on documentation because big companies do not really help us out in terms of having a checklist on stage by stage or phase, even like early stage funding, Series A, Series B, what is required, what do you have to have in place, what would investors need in terms of data and all that. There is no real structure or a mentor place where you can really access those kind of things. And I really want to know if there's a thing that investors can look into, because that would also help investors, have a lot of people who are prepared for funding rounds.
Thanks, David. That's a very valid issue you raise. And we actually, funnily enough, last night, I was finalizing a piece that I was writing to try and start talking about the whole issue of due diligence and what's required to be able to differentiate between your operating location and the domicile of your entity. We've had, because it's tech, a lot of people go and register their tech companies in Delaware. Then when they come and present, they'll present as a Nigerian company. Now, we are expecting your due diligence to come in as a Nigerian company, right? So you send us your Nigerian due diligence, but then it doesn't tie in to the business you're talking to us about. Only upon further investigation, we then realize, okay, the actual registered location of your business is in Delaware. So we start saying, okay, now give us the due diligence for your Delaware business, because that is the business in which we're investing, right?
Okay.
So those are some of, I'm just giving a very basic example of some of these due diligence faux pas that arise because you are presenting as a Nigerian investor, you give us your Nigerian location, you give us everything. But then suddenly we realize, hold on here, but this entity is not a Nigerian entity. Then we now say, okay, please give us the due diligence of the entity, which is your operating entity, which now becomes your Delaware one, right? Your proof of address of where you are located, right? Yeah. There's been instances where the entity, the location of the founders is different to the location of the business. So the business is in Nigeria. And then when we're doing the due diligence, we realize that the founders are in Kenya, as an example. Now, how do you reconcile that, right? Because we are also looking and saying, you are the founder, would expect you to be on the ground running that business. Now, how are you going to run your business in Nigeria, pre-funding, whilst you're in Kenya, right? Those are all some of, I'm just giving you some very basic ideas so you understand how there has to be congruence in terms of your due diligence so that everything ties in and ties up and gives us a very credible presentation of who you are, where your business is, where it operates from, and that it's all aligned.
All right. Just wanted to ask concerning the due diligence, which you just mentioned. Sometimes as a fintech company, you might have to have dual location due to some restrictions. So in a case whereby you're a Nigerian company, but then due to the fact that there were some certain restrictions, you had to register a company in the United States. So how does that really like affect your due diligence? Because now the company is registered in like multiple locations.
You've raised a very valid question. Now, you need to have your company architecture presented as part of your due diligence and explaining exactly what you're saying so that somebody on the other side, remember when due diligence is being done, it's being done by people who are experts in compliance, right? Okay. So you need to then give them the schematic that shows your company architecture. It then explains why this is resident here, why this is resident there, and how they all come together, right? Because what you don't want to do as an investor is invest in one entity, not knowing that there's 4 entities, and then the one you invest in does all the spending, but the 4 you haven't invested in are the ones that generate all the profit, right? So we need to make sure that the entire architecture has been tied into the agreement so that we know that if we are moving together, we are moving together in the entirety, not moving together where we are part of the expenses only and you are part of the profit only, because those are some of the things that happen and that we are able to then determine as part of the due diligence process.
Yeah, that makes total sense. That makes total sense. All right, thank you very much.
Thank you, David.
Thank you, David. Before I bring the next person up, Solari, please just put your question in the Q&A box so that we can call you up and have it visible in front of us. But before Solari comes up, there are a few more questions here. Someone wants to know, can you share about a startup that you may have doubted at the early stage, but later became successful? How were you able to either overcome your doubts, or what did you see that still made you say, okay, you know what, I still want to back this company, and then they ended up being a success?
Look, the ones that I can talk about are not within the Jua Fund, because Jua, we only started dispersing funds literally from 2 months ago, right? From the very first installment of Jua, which we launched in November last year. But along my journey of entrepreneurship, there have been many where we've been approached with various projects, we've looked at them, and we've had doubts because we couldn't conceptualize what was coming out of there. But you then have some of those moments where you say, you know what, it's not a big investment. Let's give them the benefit of the doubt, right? And we had that with one who approached us with a restaurant concept and never been in the food industry, not really understanding it, was concerned. And then we said, look, let's go for it. But What we then saw from there and its evolution and development, had it not been for COVID, I believe today they would have been able to actually roll it out as a franchise across multiple locations. So it came initially as a micro business, but once we got to see and understand the product, we're able to work with them to make it a macro business that would now actually roll out into a franchisable product.
That's, yeah, that's very, very, very useful. Very useful takeaway for us here. Before we get into the next question, we're gonna put up a poll now. So we would just like all the participants to respond to the poll. We're gonna have a conversation around some of the results. So we have a question here in the Q&A box I would just like to bring up. Someone is asking, Rugba is asking about MVP data. I would like to know how much MVP data may be required before startups can approach investors. Are there certain benchmarks or milestones to attain that will improve chances of receiving funding?
I mean, I've always said the more data points that are available and presented, the stronger your picture presents. So I've always said, get as much as is feasible, obviously without having to then invest significant resources, right? As much as you can get, because the more solid the picture that is presented, the more tangible it becomes in the minds of the investors.
Thank you for that, Adam. Another question here, Rugba, I hope that answers your question. If you'd like to ask a follow-up, you can just pop that in the chat box. I have a question from Udeme, and he's asking, what do you think is required for an accountant to get into a VC role as analyst that offers financial advisory services to fintechs and other startups? I guess this is a how do you transition between careers or bring whatever skills you have into the venture capitalist, industry? Yeah,
I get his question. Well, let me share with Udeme there that I'm a failed accountant. Okay, I actually started my very first role out of high school articling with one of the big four accounting firms. So I understand where he's coming from. I see there's a big opportunity. If you really get to understand the ecosystem and make sure that you understand what entrepreneurs require to be able to help them put together a really credible plan. But I also hasten to put a disclaimer there. We need to make sure that it is the entrepreneur's plan, not the accountant's plan. Because when an entrepreneur is coming to present, and it's very visible when it's not his plan, and it's a plan that's being put together by his advisors or by his accountants, and he can't really speak to it or respond to it. So one of the gaps that I see for somebody who's wanting to look at it in the way you are, is to make sure that if you're assisting the entrepreneurs on that journey in terms of putting together the package, you make sure that they walk with you, so that you're actually offering what we would call process consulting, where you're walking the process with them, you're walking the journey with them, and they could technically recreate the model that you have on their own now, because they fully understand it, they fully internalized it, and they fully own it.
Great point. Thank you. I have a question here from Alvi. From an investor's view, what is the most important question you must ask during an entrepreneur presentation pitch?
What is the most important question you must ask? You know, it's always very project dependent, right? Because the question, the most pertinent question always is, if you're presenting a big data, project, the first question I'd ask you is, how can you explain your very complex business to me as a layman, right? Basically, I'd be saying, are you able to simplify your business? Because if you can't simplify it, how are you then going to be able to sell it, right? Somebody who's coming in with a business that's a very strong marketing oriented business, I would be wanting to say, what is that USP that you have that is going to speak to your customer, right? So the kind of main question I would ask is very dependent on the project that we're looking at. But one thing that's critical that I'll always ask is to know that the entrepreneur believes in their project.
That's great. You have to believe in your progress, in your product, excuse me. So a question from Samuel, which is very specific. For a product like a workspace franchise, what would
what franchise, sorry?
Workspace. I guess a co-working space.
Okay.
Yes, I think so. What would an investor expect as a viable POC?
Wow, okay. That's unique in that I've never run in the workspace area, but I'm just looking at it and saying, the key is, how are you going to make sure that you have bottoms in the spaces? How are you going to warrant that those chairs have bottoms in them? How are you going to assure yourself that you have full capacity utilization in terms of the workspace that you are offering? So I think it's really an issue of capacity utilization. How do you show the proof of capacity utilization on your business? That's what I get as I just listened to it. The first thing I would need to make sure is capacity utilization, because it's a real turnover capacity utilization based business from what I assume, not knowing the ins and outs of the industry and the business.
Thank you. And finally, we have a question from Mbakani. In your view, what would be the investment appetite for a scalable payments business using white label partnership models as opposed to developing from the ground up and owning IP?
See, the big thing for me would be, so what is it that you have that can't be replicated? If it's just a series of putting together white labels, right? I'm basically buying a bottle of water, I'm buying a bottle of orange juice concentrate, and I'm buying a brand maybe of sugar, right? And then I'm mixing the three up to make what I'm calling my product. What is it that you have that can't be replicated by the next man on the street? What is it, and what makes it difficult? What is the IP in the process of creating what you are then calling your product? Because if you don't have something that is unique that you bring to that, it means anybody and everybody can replicate what you're doing overnight and therefore take away your competitiveness and your competitive advantage. So you may have a 1 week competitive advantage because people haven't seen it being done. But the minute they've seen it, they say, oh no, this is easy, I can do it. And overnight you have 1 million competitors springing up. So we always grow our own competition, we must know that. And the ability to quickly scale and move up and continue to be ahead of the game is what keeps us relevant. But if we stay where we are and somebody else comes, they take over what we're doing, and then they leapfrog us in terms of taking that very idea forward, then we're finished.
Thank you, Adam. Just looking at the responses from the poll, one of the questions we asked was, how long have you been in fundraising mode? And 51% of participants said less than 6 months. What kind of counsel would you give to these entrepreneurs who just less than 6 months fundraising? What would you say to them?
Let me get that question correctly. I just want to make sure that I've understood you correctly.
Yeah, so we asked, how long have you been in fundraising mode? And 51% of the people who responded said less than 6 months. So I'm asking, do you have any counsel to share with them as they're going through this journey of fundraising?
It's again, one of those where some businesses, by their very nature, will take a year for you to be able to raise capital in terms of putting together the correct structures. Some businesses are so basic, right, that it won't take so long to be able to raise capital. So it really is dependent upon what have you created as a product, right? And that determines the lead time to raising of capital, and how entrenched is your idea, right? How well developed is your idea within that 6 months in which you've been trying to raise capital? Did you start raising capital from the time you had the idea? Or is it now that I've got a proof of concept, that market ready, then I've been on the market for 6 months? So it's very dependent on exactly what stage we're talking about. But if it's from having your concept, your proof of concept, and then it's 6 months of capital raising, I'd be saying, look at who are the emerging financial opportunities in that space. Who's coming into the space that you're trying to get investors for, and what are they offering, right? Let's look at who the other people who've done something similar, where have they gone for funding? What type of funding structures have they done, right? What emerging capital structures have you seen from one industry that you're seeing maybe can offer an opportunity for your industry as an early innovation? So it's really very much about making sure that you're approaching the funding that's really aligned to the type of business you're setting up, because many funders focus on certain niches, some on tech, some on agriculture, some on agri-tech, some on biotech. So it's always important to try and identify who's doing what within the micro space that you want to enter.
Great points. David is asking when your due diligence checklist will be made available, or the resource that you're working on concerning due diligence.
I appreciate David's urgency, and I'm going to make sure it's very urgent for our team. So David, let me commit that over the next fortnight at worst, but likely very much before that, we will do something that avails a due diligence checklist on the Jua channel to facilitate you being able to check at some of the things that we look at, and just give you a checklist and some of the ideas of what's important within a due diligence process.
Thank you so much, Adam. And I think we will share that in TC Daily. So you'll need to subscribe to our newsletter to see that, because we will definitely have that available. A question from Edward: how can we get African governments and corporates to stimulate? Oh, actually, he wants to ask this in person. Okay, Edward, if you're there, please unmute your mic and turn on your video and ask your question.
Hi, can you hear me?
Yes, we can hear you.
Okay, I cannot find anywhere for anything for my video, like how to show my video, but that's okay. Good afternoon, Mr. Molai. I'm actually a Zimbabwean as well, from Harare. I am studying in the Netherlands, and I'm currently interning for a Dutch early stage VC company, also business development, called Unknown Group. And what I've noticed with their business model is we are working a lot with the government and large corporates to innovate. And this is really stimulating a lot of startup activity. So yes, we do invest in startups early stage, but I'm also seeing the combination between working with the government and working with large corporates to innovate by including startups. I think I'm seeing that's really promoting startup activity in Europe. And it's something I've yet to see back home and in Zimbabwe and back home in Africa. And my question is, how can we get this same system to work in Africa?
Edward, what you're presenting is fantastic, but unfortunately, we have to crawl before we can walk, before we can run, right? And at the moment, we're just at the stage, as I was saying earlier, of just trying to get our governments to recognize us as African entrepreneurs, just to recognize us as a key force for progress, a key force to Africa's Vision 2030, right? That we as Africans must be that force that's going to deliver that vision for the continent. So the first thing, as I said earlier, we have to bring the mindset of our governments to embrace us first. Once we drive that embracing, right, it then now becomes possible to start having discussions on how we collaborate towards that which is being done in the Netherlands now. But for that collaboration to happen, you have to be sitting at the same table. You have to be having that conversation in terms of the importance of entrepreneurship and driving entrepreneurship on the continent first. So it's a fantastic model that the Netherlands has produced, and I really, would love to see that on the continent. But I think it's the next phase, once we're able to get, one, the acceptance, two, the belief in the capacity of our young entrepreneurs, right? So that they are now also being brought on the table, right? But for them to be brought on the table, the current business leaders have to play their role to make sure that they win the governments on board in terms of our governments on the continent accepting us as their partners towards progress, right? And business has to start playing a bigger role in terms of assisting the direction of where our economies are going, the direction of where our investments are going, and the direction of how we're going to include the billions of young Africans, right, who by 2050 will make up over 60% of the population that's forecast to be 2.5 billion. So we're going to have 1.5 billion young people, right, who have to be accommodated. And I don't think there's any sector which can accommodate them better than accommodating them in entrepreneurship, facilitating their ability to leverage their youth and then commingle that with mentorship support from the gray hairs on the continent to be able to actually build the ecosystem like what you're discussing from the Netherlands.
Oh, thank you. Thank you for the input. And this is not a question, but also like more like an agreement with a point you indicated earlier, that a lot of foreign direct investment or a lot of foreign investments are not willing to come into Africa because they don't truly understand the investment field of Africa. This is the same thing which, because I spoke to the partners and CEO of the VC I'm interning for, and this was the same conversation we had, because right now we're focusing more on, we're already in Europe, moving more towards Asia. And when I brought up Africa, telling them that it's an emerging market and it's worth looking at, they said, listen, we are interested, but we don't understand it, And as you said, if local investors are not investing, foreign investors are not going to jump in, with their eyes closed?
They need to share risk. They need to share risk. So they will share risk with a local who understands the landscape. So absolutely aligned with you, Edward, there.
Perfect. Thank you very much. Really appreciate it.
Thanks, Edward.
Thank you so much, Edward. I also just want to say that TechCabal is a great place to actually start with if you want to understand the market, if the investors or the founders, the people that you're working with want to really understand the market. We actually provide great insight, and we'll be happy to talk to them about what's possible here. But like Adam said, we are the ones that have to set the context, right? Local investors and VCs have to be the ones to set the context to help foreign investors know what's happening here. Thank you so much. I think we have just one more question here, again from David. He said, you made mention of the following. So sorry, David, I'm not really sure I'm clear on your question here. So would you like to please come up and ask it?
All right, the question I have is, what exactly is the problem? The problem is, in a situation of conflict of interest, like he said that we should find the people who are currently investing in the particular niche that you're looking for investors. So assuming that your investor is actually already funding a competitor, how does that help, since there might be a situation of conflict of interest?
Okay, let me just explain that correct. I'm saying, what I'm saying is, let's say, look at the Jua today, right? And what we are looking at as a fund. So you would basically look and say, okay, we saw these 7 entities that have been supported by the Jua Fund, and it's in these sectors. These subsectors align with what I'm doing. So let me approach Jua, given I've seen their history in funding similar entities. Does that explain?
Yeah. Yeah, in a way it does. In a way it does. Yeah, it does.
Does, okay.
Yeah, it does.
Or were you still speaking?
No. I know. I'm actually like, it's quite interesting. So basically, what you're saying is finding people who are similar within the same space to, fund, but not naturally the same person that funded the competing company.
Correct. Who have an appetite for that segment or sector.
Okay. I understand now. Thank you very much for answering.
Okay, thank you so much, David. All right, Adam, I'm going to ask you one last question, and then we're going to wrap up this conversation. I think here's a good question. How can non-technical and solo founders gain investors' trust?
Non-technical meaning what?
Non-technical, I guess, meaning not having technology experience, but wanting to build a technology startup or a startup that relies on technology.
Let me share a story. What I knew about tobacco when I entered the tobacco industry was dangerous. I knew nothing, right? But I knew I wanted to participate, and I knew I wanted to make sure there was now African participation in terms of value addition of raw materials into finished goods. So I then went and sought out those who had the knowledge and made them co-founders, because they brought that element which I lacked. I brought the business element which they also needed. And together, we're then able to walk the journey of creating what we then created. So it's about saying you've got the business idea, you've got what it takes, right? And you've got the proof of the challenge you're coming to solve, because ultimately entrepreneurship should be about solving a pain point. It should be a solution to a challenge. And that's why I always say Africa is amazing, because with all its challenges, it means all those challenges need solutions. And so all those challenges are the opportunities for entrepreneurs to go out there and monetize. So if you are solving a problem that's out there, then it's about you finding who can help you bring on board the tech that facilitates the solution that you seek to avail to the market. So if you're able to do it through employment, if you're able to do it through partnership, those are all different models. But the important thing is to bring on board the skill you need, because I've always said 100% of nothing is nothing, but 50% of something is something. So if we go in there with a mindset that, no, I need to own 100%, but 100% of nothing is nothing.
Mm-hmm. That's very true. 100% of nothing is nothing. Yes, that's very, very true. So on that, I just want to thank you, Adam, for speaking with us today. We learned a lot, especially on the TechCabal team. We're really, really glad that you spoke with us today, and thank you to our participants for joining us. Adam, would you like to say any last words before we close out?
I mean, what I would like to say is I want to applaud you and your team on what you're doing, right? Providing a platform for interaction between Africans to build the Africa we need, right? And it's going to be only through these dialogues, but which dialogues must convert to action, guys. We cannot have talk shops about talk shops about talk shops. It has to result in tangible action. And we've got an amazing continent. We've got so many opportunities. We've got such a vibrant young people. Now, we need to harness that. And that's, at the end of the day, the reason why we came in with the Jua Fund, to say, how do we provide that inspiration to our young Africans? Not only inspiration, but also a little bit of capital to support them on their journey, but also support them with mentorship, opening a few doors, right? Creating a few relationships. And that's what we want to see happening. And we really want to encourage the continuation of that. And we want to create a channel through Jua that facilitates support of our young people to be able to become the Mark Zuckerbergs of Africa, you know, the leaders in tech on the continent. So other than that, thank you for having me on your program, and thank you to all the participants. And I really wish you the best in your entrepreneurial journeys.
Thank you so much. Thank you everyone for joining TechCabal Live. We really appreciate your time today. Would really like to thank not only Adam, but the Jua Fund as well, because they are backing high impact entrepreneurs, which is extremely important to the continent. Before we send you off, we'd just like to let you know that we are hosting a Future of Commerce event in September, the 24th of September. There will be a link that will be shared if you'd like to sign up for it. If you enjoyed hearing Adam speak, I'm sure you enjoy hearing even more of the panelists on that day. There's also a post-event survey as well. Please, I think it was shared in the description box. Please go ahead and click on that and respond to the questions there. It will really, really help us with planning our events better. A lot of the data that was provided during today's conversation was put together by the TechCabal Insights team, led by Lanre, who I'm sure you got a lot of emails from. So if you just love to see more actionable data and insights, research that will help your startup, or if you're an investor, help you understand the African market, you can reach out to us or visit our TC Insights page on the TechCabal website. And then there's TC Daily, which we mentioned, is our weekly newsletter. It goes out every weekday at 7 a.m. There's a link to subscribe. We really put a lot of work into our daily newsletter. So would love to get you guys reading that. And of course, following Adam's conversation, we'll definitely be putting in a lot of tips for, early stage entrepreneurs, founders who are looking to really find the right investor to work with them. Thank you so much, everyone. I think that's it for us. Thank you for joining us.
Thank you, Carmen.
No problem. No problem at all. Bye, everyone.